Breaking news! Just kidding. It's just a market update. Hey, Teresa Timms here, president of TDR Mortgage in Upland, California, and the SoCalLoanPro.com. I want to give you a little market update and let you know where we stand in the Inland Empire and Southern California. We're experiencing a little bit of a slowdown and stabilization, we've noticed. However, the trend in the Inland Empire is with affordable housing, we're seeing multiple offers, we're seeing over asking price, we're seeing sellers asked to remove appraisal contingencies. In our mid-level market, $500,000-$600,000, we've seen that stabilize, and if it's a great value, a handful of offers. And in the upper end market of 700 and up, we're seeing a bit of a slowdown and stabilization and price decreases pretty much across the board. Not really seeing that in LA or Orange County though. Folks out there seem to have a lot of money and can pay all cash for things, and all cash sales are really driving the market. Rents are up pretty much everywhere. In fact, I'm hearing a lot of people move from their apartment because maybe they're paying $2,800 a month and they get a rent increase of $200 or $300. That's a pretty significant rent increase to encounter. And I think in a lot of cases people are paying close to what a mortgage payment would have been a year or two ago. So if you didn't buy a year or two ago, don't feel too bad though, because there still are opportunities in certain areas. And that's one of the reasons why home purchasing makes sense. You're going to leverage that purchase into making sure that your rent per se does not increase. Rates remain stable. The low 4s for conventional home loans, the upper 3s for FHA and VA. Jumbo loans are hanging out in the high 4s, low 5s, unless you have access to portfolio product like we do. I'm a mortgage broker, which means think of me as being able to go around in the back door and get wholesale rates and shop for different lenders where you fit best. We recently did a jumbo loan. I believe it was a $1.1 million loan, and it was a 30-year fixed at 4.1, and the gentleman paid only about a 3/8 of a point. One of the reasons why I think that the market is going to continue to go up the next few years, I know the market is going to go up the next few years, because mortgage payments are still pretty close to what a rent payment would be. When a mortgage payment is $500 to $1,000 more than what rent would be, that's when the market starts to kind of get sketch. And we're kind of getting close to that in some areas. And when that happens, it's kind of like magic. There are people that come to the table that want to lend their money because they think it's an acceptable risk. An instance that came recently is for highly qualified persons looking for jumbo money, we have a 5% 40-year interest-only product. Yeah, 40-year interest only. We didn't even have that like back in the day. Now, for a $600,000 sales price, you're looking at a payment, let's say, of around $4,000, a regular fully amortized 30-year fixed, and this 40-year interest-only product is around $32,000. Don't quote me on that. It's kind of somewhere in there. It's a pretty significant savings, though, like a huge savings. At the end of that, it's 10-year interest only. At the end of that 10-year term, it turns into a 30-year fully amortized product. And you really have to have high FICOs, low debt ratio. So for the investor that's offering that on a portfolio basis, he thinks that's an acceptable risk. Now, there are other investors that will be looking to put their money somewhere in our ever-increasing real estate market. So look for these non-traditional or Alt-A products begin to hit the market when affordability starts to peak here toward the end of the year. We also have this great, amazing 3% down product where we're just going to give you $5,000. That's right, we're just going to give it to you. Merry Christmas, and it's not even Christmas yet. It's one loan, low fours, and no mortgage insurance. It's amazing. Amazing. I think that's it. Oh, no, there are some changes that have recently come out with regard to student loans. So if you have a client that was recently declined, or you as a buyer were recently declined because of high debt ratio, they changed the way we look at student loans. So give us a call and let us take a look and see if we can't help you buy a home now, given these new changes. Teresa Timms, SoCalLoanPro.com. If you're looking to buy or sell in Southern California, you pick up that phone and give me a call at 909-920-3500.